Prashant Khemka, founder of White Oak Capital Group, manages oodles of money, has a gem fund, and therefore no better person to talk about both the global and local factors combined than him. Prashant, good morning. Thank you so much for joining in on PM Modi's 75th birthday. And 11 years into his post at the helm of affairs, I think the country's traveled a long way. What is your optimism for the times ahead?
Good morning, Neeraj. Thanks for having me here, particularly on this day. Let me use your platform to wish our Prime Minister a very happy birthday. बहुत बहुत शुभकामनाएं. आप जियो हजारों साल, साल के दिन हो 50,000, and may India continue to rise. The discussion that you're just having, I think it is positive. It is indicating that some kind of a thaw, more than a thaw, progress is being made. And as we discussed before, and given the nature of negotiations that the Trump administration has had with other countries this year, in the preceding months, it seemed, that it was very much a negotiating tactic. As talks were progressing, likes to amp up the pressure, and that's why the additional tariff and whatnot. And it seems like it's de-escalating, and over the coming days, weeks, or months, we should have a deal between the two countries, would be my expectation at this point in time.
Prashant, hi, Tamanna here, and such a pleasure to speak with you today. What we're trying to do is, while we talk about, of course, the birthday celebrations, etc., is to also talk about the impact of governance and policy and what it has done, say, for the capital market. So I want you to talk a little bit about that. The view towards capital markets, the wider participation of Indians in capital markets as a measure for creating wealth, and the change that you have seen.
Absolutely. It's been an accelerated journey, I would say, over the last decade. The journey began, obviously, many decades ago, but it has picked up pace over the last 10 years. As we've all seen how the asset management industry, which was, I don't even remember what it was exactly. I do remember in 2004, it was just equity AUM of Indian asset management companies total about $4 billion, and it's today over $500 billion, and vast majority of it has been raised over the last decade. There's a long way to go, but it's great to see that retail investors have much greater confidence in the industry, in the asset management or mutual funds that are being offered, and in great part the policies that the government and the regulator have encouraged in this regard has helped deepen the penetration of mutual funds in the country and rising participation by retail investors.
Most certainly. Prashant, what's the outlook ahead from a market's perspective? Simply because let's assume that we don't know the effect on the economy, but let's assume that with a 7.8 number in quarter1, and even if quarter 2 were to wilt a bit, hopefully the rate cuts, income tax cuts that have happened, plus the GST measures will bring about a boost to consumption and thereby to the economy. Will the markets follow that, or do the markets need something else for either global capital to work alongside domestic capital for taking the markets higher? And should the markets go higher, or are they well valued right now?
We always believe markets are reasonably valued and fairly valued in aggregate and reflect these near-term macroeconomic developments. I think to the extent that the markets were, rattled, and it wasn't like the markets pulled back big time or anything, but to some extent there was concern in different corners amongst global investors as well. That whereas till 6 months ago, India was thought of as an alternative to China and the China plus one story, and to the extent that that was aiding economic growth, can that take a hit? Can that have a bump in the road with this additional tariffs going from 25 to 50? And that concern should get addressed once we have this hopefully positive outcome from the discussions going on. The positive side of this temporary hiccup is that the government has further pushed the pedal on and made the resolve, it seems, to push further with reforms. Some of those in form of GST cut we have already seen materialize, and hopefully we'll see many more to come. The next budget, while it's 6 months away or something like that, it's good that it's 6 months away. There'll be a lot of time to work on some significant reforms, and I'm very hopeful that this acted as some form of catalyst and would galvanize further momentum behind reforms.
Prashant, in terms of where we go from here, so now possibly a double support coming in. You have GST, which will give you consumption boost from the 22nd onwards. Frankly, though, that will be maybe a temporary blip, right? Because if everyone's going to buy something new, they're not going to buy an AC and a TV and a fridge and a car. So, and that will also be a postponed decision, possibly. Second, is the tariff concern easing? Do you see that giving wings to the markets and also easing some concerns that FIIs may have had?
Yes, absolutely, Taman. I think some concerns of FIIs would certainly ameliorate or be mitigated if the tariff situation were to normalize, because that seems to be right now top of mind for most investors globally, even though the impact, as many of the analysis from sell side as well as what we've done shows that the impact is not that huge on the market. At least the direct impact is not so huge on the market. But yet that is a niggling concern, and that should get mitigated. And along with rate cuts, not only in India and globally, that should bode well for equity markets. So, globally markets have done very well this year. India, after many years of superlative performance and outperformance compared to emerging markets and developed markets, has taken a bit of a backseat this year. But if you look at US markets, they're up double-digit dollar terms. Emerging markets are up 25+%. China and other parts of Asia like Korea are up 30 to 40%. So markets globally have done already quite well this year. And hopefully India would do some catching up over the coming few months. But I think the markets are reasonably valued at this time. A double-digit kind of return annualized is reasonable expectation. Maybe a few percentage points stronger in the near term if all these things play out in the positive direction.
Well noted. Okay. Prashant, the telltale signs for near-term optimism seem to be there. I mean, we've seen the broader markets rise for 8 days on a trot. IPOs are now getting subscribed heavily. As we speak, Urban Company, which got subscribed about 108 times, is apparently going to be about 50-55% higher on listing. So some signs of that broader market fervor seem to be back. Is this positive in that maybe the Nifty may consolidate because, as you said, markets at an aggregate reflect fair value, but as long as it stays okay, but the broader markets and specific bottom-up themes do well? Are these signs of that?
This is actually, Neeraj, the biggest positive of a healthy or a positive or a rising market and rising participation. To the first question that Tamanna asked about, increased retail participation, and I was remiss in not adding the biggest positive impact in the real world of a healthy or a rising equity market, which is often underestimated by I would say globally, policymakers globally, is that it channels financial capital towards entrepreneurs. Fundraising, IPO frenzy, and all this. Think of the real world positives of that. So many entrepreneurs are able to raise capital, be it 1,000 crores, few hundred crores, or even SME exchange. Yes, there would be duds during the process, but so many healthy, good, positive outcomes would be delivered because many, fruitful ventures, which eventually go on to become big companies, contributing very healthily to job creation and economy, they all get funded because of this. And that's the best part of a healthy equity market. And when I see all these IPOs getting heavily oversubscribed, it's the it's a very positive outcome, Neeraj, as I see for the real economy. Yes, you'll have booms and busts in the IPO market as well, but net it does a lot more positive good than negative harm.
Prashant, where are the areas where you see more potential coming up? Are you looking at maybe capital goods making a comeback as capex will improve? Are you seeing consumption being the next leg, financials? What are you liking right now?
A sectoral perspective, I do think sector like financials, which has gone through a fairly difficult time in the real world. Again, this year, I think financials might have done well. But if you look at the non-performing loans, particularly in the unsecured personal loan segment or microfinance, and generally credit quality in that segment has suffered. We think that might have finally the problems might have peaked out and should see improvement. So financial sector, the operating parameters we should see turning healthier. Industrial sectors or capital goods remains to be seen because they've had a fairly strong 4 or 5 years. So you have to be very well in every sector. You have to be very selective, but in industrial goods, you'll have to watch out whether the momentum of last few years can sustain over the coming time period, whether the capital expenditure from private sector indeed sustains and picks up further momentum, because after such strong growth, you would need very healthy order flow to sustain revenue and earnings momentum. Another area where I think there's a long way to go, and I don't know when it accelerates and whatnot, but so-called new age economy or new age urban company that you mentioned just now, in a way, is an example of a listing from the new age sector. That is where we see a lot of activity in the coming months and years as well, in terms of new companies coming to the market. And many of these companies are not cyclical in nature because they're starting from such early stage in their life journey. Then regardless of economy growing at 6% or a percentage point higher or lower, these guys can sustain very strong double-digit growth with hopefully consolidation in the industry. Many of them showing very improved profitability as well over the coming many years.
Prashant, one final question from mine. You reckon that export-oriented themes could do well if indeed the tariff tensions ease out, because the valuations out there relative to the domestic space have corrected despite the recent rise?
Yes, Neeraj, to the extent that they've corrected, you may see a relief rally in them once the deal is done and dusted. But to be, candid, you didn't see any massive correction other than few specific situations, particularly in the most hit sectors like textiles and so on and so on. And there you can see a sharp recovery if the deal finalized is in line with earlier expectations of maybe tariffs on India coming in the 15 to 20% range all in.
Got it. Yeah, and yeah, maybe you're right, Prashant, that to the extent of the correction, which was also not very high, maybe a pullback, but maybe domestic currently holds center stage. Okay, Prashant Khemka, a special occasion to have you and your thoughts. Thank you so much for taking the time out, and well, lots of luck for the festive season building up.